Rob is calling from Toronto. Go ahead, Rob.
Yes, David, I'd like your opinion, please, on Pembina Pipeline. And Andy, if you could get the street consensus, I'd appreciate it.
For sure, Pembina Pipeline.
Okay, so Pembina is a holding at Barometer. We own really two names within the energy infrastructure space. We own some Keyera and we own some Pembina. I do think that energy infrastructure as a theme is now under some pressure with this new leg down in energy prices. They tend to hold up longer than the producers do, but if it gets bad enough, they get impacted. So I do have a little bit of concern about the sector. Pembina, I think, is one of the two strongest names in the Canadian universe. So we currently own it. Although I am sensitive, if energy were to get much worse, you'd likely to see us continue to reduce the weighting. I put it in perspective. I think in a couple of the portfolios we have sort of 7 or 8%, which would be energy infrastructure. But Pembina currently is got a great yield, and I'm comfortable owning it currently.
What I'm seeing, courtesy of Reuters, for Pembina is there's one strong buy, there's 14 buys, and there's one hold. So it sounds like the analysts love it. And the median price target is $50. And what is it trading at now, David?
It's trading at 42.
42.
I mean, here's the thing.
Yeah.
These companies have long-term contracts, right? So their revenue is pretty well protected. The problem is if energy prices get low enough and production slows down, they basically sell toll roads, right? And if the volume slows at some point, or if their counterparty that they have the contract with at some point has financial difficulty, then there's some risk there. So that's why they hold up longer, but they do ultimately get impacted by energy prices.
Kevin is calling from Peterborough. Kevin, go ahead.
Thanks for your wisdom, guys. I'm just wondering, Canadian National Railway, would you buy it at these prices right now, or would you wait for a bit? And if I could get the consensus, it'd be great. Okay, thank you very much.
Okay. So the economically sensitive sectors in the market rested from December through May. And since May, we have seen a reacceleration in financials. We've seen a reacceleration in industrials. We've seen a reacceleration in transports. Okay? So we like transports because they obviously the rails have a real exposure to North American economy. CN Rail, of all of them, we think has great north-south exposure between Canada, the U.S., and Mexico. And so it has been one of the best performing rails in North America. So we like the sector. We think that the North American economy is going to continue to grow nicely. Earnings estimates are moving higher. And, you know, when we talk about the market itself, we've recently seen the Dow Transportation Index come right back to highs along with the Dow Industrial Average. So that's seen generally as a very bullish thing. We own CNR, we own CP. I would buy them both here.
Okay. Joey in Edmonton, fire ahead, please.
I'm just wondering what your thoughts are, where it'll be within the next 6 months to a year. I know it's kind of hovering, close around the $90 range. Do you see it over 100 in the next 6 months or so?
Okay.
Just let you know and what your thoughts are. Thank you.
Okay, Joey. Well, thanks for your call. Financials is a core theme for us currently. We like the large U.S. banks and large regional banks. We like the asset managers and capital markets companies. And we really like financial technology. This has been a theme that we've talked about for 3 or 4 years because digital transactions are growing around the world at greater than 10%, and Visa is in the center of it. So whether you're using your Apple Pay or whether you're using PayPal, all of these things wind up funneling through Visa, or a lot of them do. So we really like financial technology. If rates start to move a little higher, as I believe they are, it's possible you could get a little bit better performance from the banks themselves that benefit from rising rates. But as a long-term secular theme, financial technology is going to continue to be, in favor. So we own Visa, we own Shopify in Canada, another play on the same theme. I think I would buy it here and be happy to hold it.
We have Max calling from Vancouver. Go ahead, Max.
Good morning, gentlemen. Thanks
there.
for taking my call.
Pleasure.
Dave, I have a New Flyer Industry debenture maturing end of this month, and I have an option to buy it at $10 US. However, New Flyer hasn't got much of a dividend, so I have to rely on growth, and it has already grown so much. Is there any left? I'll hang up and listen. Thanks for taking my
Sure.
call.
Thanks a million.
So New Flyer is a really neat company. For those that don't know, they produce buses and they sell them all over North America. They are not really at risk of, nationalist policies in the U.S. because they have a lot of production facilities in the U.S. The attractiveness of the business is that they have really long contracts with lots of different municipalities, and their backlog has just continued to grow over time. They have an ability to be quite profitable because they can fit these buses up with any number of about 1,000 different options, which are very profitable. So we like the stock. We own the common shares. Now, dividend yield is 1.7%. So it's a pretty good dividend. It's not a high dividend payer, but you should get dividend growth over time. I know that the stock has gone up a lot, but this company just continues to grow. So I am comfortable owning the shares. It's a different risk profile than owning a debenture, right? Clearly. So you have to get your head around the fact that you're buying common shares as opposed to holding, in effect, what is like a bond. So if you're comfortable with that, we like the company, and we like the shares, and we like the industry, we like the industrial space.
Okay, we're going to be right back with David Burrows, Chief Investment Strategist at Barometer Capital Management. The topic today, North American large caps, 1-855-326-6266.